Tonight, the key developments are there was an update with the ceasefire between the US and Iran, which is due to expire later today. And the update is there's got to be no update to the ceasefire. So Trump's basically holding firm that he doesn't want to extend this. He's now getting on the front foot with his rhetoric, saying that he's not going to extend it, and if anyone gets in his way, he's got to start getting more aggressive. He singled out Oman as the one he sort of sent this quasi-threat to, and Oman are the ones that are dealing with Iran, trying to open up other passages to get oil moving. Basically, all the shipping over the weekend through the Strait of Hormuz has sort of ground to a halt, and now oil prices are starting to reflect this and have spiked over the last few hours. So they're raising higher, which is reflecting this increased tension. Also on his warpath is Canada. So new tariffs are set to kick in later this week against Canada. This includes auto manufacturing, which has been one of Trump's big points over the last few months. Is he wants to bring manufacturing back into the States, and one of their big manufacturers are vehicles. They've got a lot of big companies based out of the US that import parts. He wants to make these in America to boost that sector. Canada is one of the big exporter of these parts to America, so he's trying to put 15% tariffs on those exports. Canada is hoping to get a full exemption, but at the very least bring this down to 10%. But so far he's holding firm. Trump's holding firm. So we'll see the outcome on that. Obviously, that's going to have a big impact on the Canadian dollar. So the dollar CAD cross will be the key pair to look at, depending on what happens with the tariff. And then the third major story is there's been a bond sell-off, basically 30-year Treasury yields. So the long-term Treasury yields have hit their highest level in about 2 decades. And it's mainly due to investor angst over the rising government spending, company borrowing to fuel this AI demand. And so they're asking for a better premium on these bonds to justify this increased spending. And it's really signalling a global shift into how this spending is occurring. And obviously inflation is still stuck well above the Fed's target. So there's a lot of pressure on investors at the moment. And what this actually is looking like is normally when yields rise, gold drops, because if you hold gold, you're not getting a yield out of that. But if you're holding a bond with a high yield, obviously you're making interest coupons on that. So normally there's an inverse relationship, but because this rise in yields is primarily because of the rising risk premium, it actually looks like it's going to be supportive of gold. So it's going to be interesting to see how this sort of plays out in the short term. Then on the data front today, there's not much occurring. The main stuff is out of the UK. They're going to have their unemployment print later this afternoon, looking at a slight drop to 4.8%, currently sitting at 4.9%. And their claimant counts are going to rise, which is sort of in line with what you would see with an unemployment drop. And what this means is any drop in unemployment rate will be bullish for the sterling. So drop in unemployment rate raises currency as more people have more money to spend in the economy, which fuels inflation, which means rates puts pressure on interest rates as central banks will look to keep them higher. So looking at the big movers, we can see that oil spike of about 3% across the day, leading to that increased tension. The ceasefire looks dead in the water, so we'll see what happens moving forward, whether there's increased hostilities or whether there's still movement towards opening up the Strait of Hormuz. It's not clear how it's going to play out yet. Both sides still posturing. On the currency front, the yen continues to weaken, so most majors moved up against it, including the Aussie, as we can see. So I had a solid day against it yesterday. Good for all you Japanese travellers, anyone got plans coming up. And then as expected, when we see a rise in tensions, we're going to see a fall in those risky assets, primarily that of equities. So we're seeing a drop across the US equities. So we can see the gains made at the end of last week for the big US indexes. They've come off yesterday with a 0.5% drop. And then yesterday there was a bit of volatility on the crypto front. Again, I think it's just the changing geopolitical landscape. There was no major news that was a catalyst for this. It looks like a lot of the cryptocurrencies did have a bit of volatility. But importantly, crypto fell off last week, so this might have just been a bit of a recovery bounce yesterday, getting some of those losses back. In the grand scheme of things, it wasn't a big move, but you can see towards the end of last week, it was pretty flat. So yeah, a little bit of buying on crypto yesterday, still well down from its peaks at the start of the year. Moving to the chart of the day, this is looking at the Euro USD, the most traded currency pair in the world. This is the daily chart looking at it at the year. We've looked at it a few times over the last few weeks, but there's a clear pattern that has emerged on this chart, and it's called a double bottom pattern, which is a bullish reversal. So we can see the double bottom is down there. You'll see the two lows, and then that blue line is what we call the neckline. So in the chart, it'll be a bearish chart. It'll hit a low, go up, test the neckline, hit another low. When it reaches that neckline where it previously tested, it's now pushed through that, which is a bullish reversal. So now it's got some positive momentum. It's broken above the 50-day moving average, which is the average price over the past 50 days. So that's a shorter term one. It's just broken above the 100-day moving average, and it's closed above that last night. So now the next target is that 200-day moving average, which is about equidistance between the lows and the neckline, and then the same distance to the 200-day moving average. So it's all lined up pretty neatly. That's going to be the key test point. The price will likely reach up to that point. It'll either come under pressure and drop back down, or it will gain strength and break through it, and that'll become a new support level. So one to watch over the coming days to see how it reacts. Obviously, we've got some fundamental factors as well, which includes FOMC minutes, so the Fed minutes. Walsh has moved away from giving forward guidance, so now these meeting minutes become a key thing the market looks at to see what their commentary is, what they're thinking about moving forward. They had 3 rate hike dissenters at last meeting, so we'll see were they outliers or is that what the room was sort of moving towards. And then he's also got a keynote speech at the end of this month where he may give some hints towards his next decision as well. A really interesting one to look for. We've got a confirmed pattern, and we'll see how these fundamental factors affect it moving forward. And then the article of the day, obviously most would know the Aussie housing market's under a bit of pressure. Prices have fallen in every major city recently. And this article is just got to have a look at that. There was been recent Kiwi and Canadian property bubble bursts, and we'll see how Australia compares to those markets and whether they give any insights about what could potentially happen. So just an interesting article if you're interested in the property prices and what that means in the Australian context. Thank you very much. Have a great day.